following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to TFNN here on May the 9th. 2016. Okay, folks, we're going to start off with the gold market today because we're having a nice correction here. We also have a really nice pattern that is setting up. I'm not sure if it's going to end up the way that I'd like to see it end up, but it's certainly got all the attributes that you need. If you'll notice that first correction that we had down there at the 1272 level way back on the 5th of May, then we rallied up. Yes, Larry has a brand new microphone, first class. I took all my winnings from the Kentucky Derby, and I put it into a really good microphone. So anyway, my horse didn't do too bad. He finished 11th out of 20, which is better than 9 other horses. But anyway, at 16-1, he was worth a $2 bet. But anyway, it was a lot of fun to watch it, but it didn't work out the way that I wanted to. So we'll see what happens. Let's get back to the gold market. We'll see how this works out because this is certainly interesting. You know, we had a high on Friday, right exactly at the 786 retracement of that move at the 1299 level, and it was really. It took a while to get there, and then it stayed there for almost an hour before it rolled over. Those are the kind you like to see because, they can go popping through these numbers very, very quickly. But it stopped exactly at that 786. And now what we have is a very, very clear ABCD pattern that ends at 1255 per ounce. And that would be a very interesting one for several reasons. The fact that it's at the 61% retracement there, and it would also be a 1.618 expansion of the move from the 5th to the 8th when we had the non-farm payrolls come in, and it would also be down 2 weeks from the high, which came in at 1306. So that would really be something to really look at. I mean, you stop and think about this. If gold, and we're not very far away, folks. If it did what it did on Friday, we're there. Because I'd like to see it take a few more days to get there. I don't want to get there too fast because then it's going to be a little scary. But if it takes, 3 or 4 days to get there, that would be the ideal situation. So we want to keep an eye on it here at the 1270, 1255 level is the area that I would be looking at. Coming down from that other high, we would have a $34 correction coming in at around 1264. That would be a possibility of that one. So we're looking at a band here between 1264 and 1255. So how do you handle it? Well, you've got to give it time to get there and see if there's a smaller pattern as you get to that point where you can risk say less than $8 on the trade because, remember, gold is a $127,000 contract. So risking, $800 on something like that is certainly an acceptable risk because, this thing can really move when it moves. But the ideal situation would be for it to come down around the later at the end of this week. And we'll see if it can get down to that, either one of these two numbers, 1263 or 1254, 1255. Those are the ones that I'm looking at. I like them both because, you have some similarities there. But I think you got to nibble at it first at the 1263 level and then, risk, $6 or $8, let's say $8 at that point. And then if you lose on that one, you've got to try it one more time, at the 786. Anything below that 1250 level would be a very, very negative sign. And remember, we've been seeing some alarming open interest things happening in both gold and silver. The open interest is holding its own, but it's increasing at a very, very negative rate. I mean, it's it's almost to the point of decreasing. And silver, in fact, has had several days last week where the open interest actually dropped. So both of those things are, I think, relatively important of what we're watching here. Another market that's certainly on our radar is the grain market. I wanted to take just a minute here to go in and look at these November beans because we've got a shot here for November beans to get up another 20 cents, which would be a double ABCD pattern and also a butterfly pattern on the upside. But if you'll notice, all last week, the market stopped at the 61% retracement 3 different times. They're at around $10 a bushel. So it seems like $10 a bushel for the new crop beans, the Novembers, seems to be a fair price. At least that's what they're banking on right now. So that's a pretty interesting one also to keep an eye on because it's got a lot of patterns that are completing. Now, I wanted to mention just a little bit about some of the things that we had happen in the market on Friday. If you'll recall, we were looking at some pretty major support in the NASDAQ down around the 42.75 level. It held that level and was able to rally up. Last night, it got all the way up to the 61% retracement of the high that we made back on May the 2nd. That was at 1340. So, it's at 1340, 4340. So it's had one heck of a move to the upside here. But at that point, you notice that we had the ABCD patterns that were forming there that stopped right at the 61% retracement on the long-term chart going back over the last 2 weeks. But we had several of those ABCD patterns. But the important thing is that it came within, I believe, a half hour of the exact time of the new moon on Friday. So, sometimes these things work, sometimes they don't. If you have an interest in why some of these things work on a lunar basis, my good friend Al Larson has written a book called Your Electric Life. And if you will get a chance to go into Kindle at Amazon, you can get it for, I believe, $12. It's a really incredible book that describes in Al's interpretation of why the moon affects us so much. He basically views, what our bodies are like little batteries, and because we're 80-some% water, that we're affected by these tidal things that occur when the moon, moves from apogee to perigee, and then the tides go in and the tides go out. But it's a very compelling case. Al is one of the few people that has a double PhD. He has a PhD in astrophysics, plus he has a PhD in computer sciences. So he is one smart cookie. He really is. And he lives up in Thornton, Colorado. I believe I've had him on the show once, and I think I'm going to have him on again because he's always got some really interesting things, to share with us. He's, constantly looking at the markets, and he happens to be a very, very exceptional astrologer on top of that. So we'll try to get Al Larson back on the show, hopefully maybe later this week, depending upon what our schedule is. Okay, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take we looked at the NASDAQ before. We want to take a look here at the E-mini S&P because we had the same thing happening with the E-mini. When it got down to that 2030 level, we had a 78% retracement from the low back on the 24th of March. And then we also had several ABCD patterns forming in a small 3 drive to a bottom pattern. And that's on a 4-hour chart. So you get to see a lot of action on this. So it's a pretty good idea. Now, where could we rally to? Well, if you look at the last rallies that we've had, they've always been around 30 points. So if you take 30 off the bottom at 2030, the first area to stop would be at 2060. And that's where it stopped so far last night. Now, because it got there so quickly, that might not be it. The 61% retracement of the high from the 21st to where we are right now, at 2030, you dropped over 72 points. So 40 some points would take you back, and that would put you up at 2072. So you want to watch what that is going to be. Remember, these lunar cycles that we look at are pretty accurate. The problem is they only work for usually 3 or 4 days. That's not something where you can put your hat on, like Mercury going retrograde or something like that, because that happens 4 times a year. We get these cycles, twice a month because they're spot on, at these 14.5-day increments, looking at the lunar cycle of apogee and perigee and full moon and new moon. The difference between the full moon and a full moon with apogee, because if you have a full moon with apogee, then you're dealing with a really a strong physiological thing. It's really because you're at the farthest distance away, and so the gravitational pull would be would be working. Now, remember, we have, since we're talking about Mercury in here, we do have Mercury will be going into direct motion on the 24th of this month, along with, at that time, we will also be having a full moon at that time. So that's going to be a real interesting one. But that's a couple weeks out the road, so we don't really know what's going to happen at that point. So we'll see what'll happen as we move through this. Okay, we had a question. I talked about the advanced decline line a little bit last week, and I wanted to just show you, what I look at when I'm watching these things, because all I'm trying to do is I look at it as an indicator, and whenever the advanced decline line is at an extreme, the market is usually getting ready to do the exact opposite. So when you see the extreme way up there at the high, that means that the market is ready to come down. Now, if you look at the high that we made back on May 19th, when we had Mercury going retrograde and a new moon, you'll see the market did sell off at that time. And of course, it topped right at that same time when we had Mercury doing the same thing this last time that we had Norm Winsky on the line. And he told us we were looking for that spot, and it certainly came in at that level. So the fact that the advanced decline line went so much higher, but the exact New York Stock Exchange Index did not, is also another negative, because the stock should have been bullish all across the board, and that is usually not the case to see what's happening. Boy, you folks, I'll tell you, you folks here at TFNN in this Tiger's Den sure have a lot of great information. I mean, you put stuff out here that is truly amazing that I can't remember, because here they're talking about Mercury begins its transit at 7:12 in the morning and takes about 7.5 hours to do that. That's all true, but for trading purposes, I just sort of rely on the patterns, because that's what I can understand and really take a look at. Now, I wanted to move to the since we talked a little bit about gold, I think we should talk some more about the silver market too, because it's starting to be laggard again, like it was once before. We're now down around 17. We're below that $17, or we're really close to that $17 a barrel an ounce level. But as you can see here, we've had a really negative divergence again in the silver versus the gold. You'll notice that the gold went up to the 78% retracement, whereas silver couldn't even take out the previous day's high. That's a negative thing. And remember, this was happening when we were right in the midst of the non-farm payrolls. Even with the non-farm payrolls, there was not enough buying in silver to get it up to a 61% retracement. It missed the previous day's high by 8 cents, whereas gold, took out the previous day's high by well over $9. So that was a huge difference. Remember that the gold is 6 times the open interest that we have in the silver, so it's going to have a lot of volatility. But silver has pockets of some really illiquid stuff, so you've got to be very, very careful in that silver market, because it can run 50 cents just by a blink of the eye. So these are the things that we're watching. The open interest is not telling us that this thing is real. In the silver market. If it were real, the open interest would be constantly increasing, and that is not the case. 1 second, please. Sorry, I had to sneeze. Okay, now, long term. Someone asked a question about silver and gold. Long term, they look pretty good. I mean, they came out of here. They rallied 12 weeks, like a rocket ship coming out of here. And that's the main thing of what we're watching here. So the pullback, since we're up 12 weeks, if we get a nice 3-week pullback, it would stop at the 38% retracement of this whole move. Oh boy, that would really be an ideal one, because that's what we had happen in the U.S. dollar index. So we'll see. David White is setting in for me this morning. Well, hello, David. I'm glad you're welcome here. I thought this was me, but evidently it's not. Well, I don't know what's happening, but this is me. I think it is. Let me check. Yeah, it sure is. Okay. Anyway, we'll keep going here, and if I get turned off because they think I'm David White, we'll be able to see. All right, let's move on to the next one. Let's go on to the next one that we want to talk about, and that is the. Hold on one second. I want to get it up here so that you can look at. This is one that is one of the currency plays that works very good with the stock market, and that is the Japanese yen versus the U.S. dollar. I put this in here because we have a really nice ABCD pattern over the last 6 trading days. We've rallied over 300 pips off the bottom, and that bottom, you remember, was a 38% retracement on the long-term weekly charts. So what this chart is telling me, that anything above the 109 level would tell us that we're most probably have made a very, very important bottom in this yen dollar, and that would be very, very important on a longer term basis. So keep this one in mind, because foreign exchange is these markets are so much bigger than the stock markets and the stock indices markets that you can't even compare them. We trade billions, trillions of dollars over there, where we only trade billions over on the stock indexes. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to switch over to the crude oil. We had some news over the weekend. The Saudi oil minister lost his job. Folks, that's not a big deal because these guys are all related. They're all cousins, or I mean, it's really tight over there. That's all royal family stuff. So don't worry about them. They're going to be okay no matter what. But the thing about the crude oil chart is very interesting here, because if you go back and look at that March to May level where we had the big AB pattern, and I mark it AB so that I can show you what's happening, now, because if you look at the CD leg that we had from February through April, those were exactly equal. In other words, they rallied around $13 a barrel. And that's the same thing that's happened just recently. So what one would expect would be a nice retracement from this level. And first, the 38% retracement will come in around $40 a barrel, down 10%, from where we are right now. But there's not a pattern here, to be a buyer. We do have a lot of resistance at the 46 level. In fact, we tried to attack that last night in the overnight markets, but it sold off at least momentarily from that level, telling us that there is some resistance up at that 61% retracement of that high from way back in last May. Remember that it topped in late April in the crude oil, and if you believe in seasonalities, that's exactly what we did again this year. So you want to be waiting for a pullback here, and of course, if you want to get short, it's around that 46 level where you have the butterfly pattern coming in. So this is what we're looking at, in the oil market. I don't really look at the news as far as the stuff that comes out on Bloomberg and CNBC, but when you see a breaking news story about one of the Saudi cousins loses his job and he's replaced by another one of his cousins, it really doesn't mean very much, but I want to see how the market actually responds to it. Perfect example was Friday. We had a really negative non-farm payroll number, which should have sent the stock market spiraling down, and it started down. But, after the first hour, the market completely reversed itself, and all the people that were bearish, were sitting there with, egg on their face, and the market, had a big rally. Maybe it's only a one-day rally, maybe it's only a two-day rally, but at least the market rallied, right off of the, major report, and all those numbers that we had down there was the main thing that see what's going on. I've had a request to talk about a three drive to a bottom pattern because that's a very interesting pattern. If you'll give me 1 second, please. What I need to do is everything is beeping at once here because the market's opening, and I want to see what we have going on. We actually got gold below 1270. That's a good sign, folks. Let's just keep that in mind. And give me one other thing here that I'm watching. I've got too many things on the plate today, being Monday. So if you'll give me 1 second here, we will we'll watch it very, very closely. I know Mr. Z is probably watching the wheat, and we just made a slightly lower low in wheat at a 78% retracement level at the 460 a bushel level. My beeper went off on that one, so we want to keep an eye on that. But let's get back to a three drive to a bottom pattern and three drive to a top pattern. These are really great patterns. These came right out of Gartley's book. And frankly, I know I've got one or two of them here that are always in. Oh, here's one right here. Well, we'll just do the oil because that's the easiest one to look at. We were just watching the oil. Let's put this up. Now, the three drive to a bottom pattern was in Gartley's book, but it didn't become popular until the 1950s when a man named Dunnigan, William Dunnigan out of Santa Barbara, California, published a trading book called Dunnigan's One-Way Formula. And in that, he had two books. He had the Dunnigan One-Way Formula, and then he had the Dunnigan Thrust Method. Both of these patterns that he used in both of those books came directly out of Gartley's book, just like almost all patterns come out of Gartley. They do. They all come out of Gartley's book. But the three drive to a bottom pattern was very interesting because what he tried to talk about was that you want to see some very good symmetry between the drive one, between drive 1 and drive 2, and then drive 2 and drive 3. In other words, the time that it takes to get from drive 1 to drive 2 and drive 2 to drive 3 helps identify the 3 drive to a bottom and also 3 drive to a top. There's a rule of thumb that Dunnigan talked about that was very important. If you have to force your analysis to see whether it's a 3 drive to a top or 3 drive to a bottom pattern, chances are that it's not going to be it. So that's the main thing. I hope that helps. Okay, we got our first caller from North Carolina. Yes, sir. Gator, are you there?
Yes, I am. Hi, Larry. How are you?
I am good. What can I do for you, my friend?
I have a question about the moon. Okay, the moon is in an elliptical orbit, and I understand, well, I think I understand, apogee and perigee as far as I can see how that could affect the stock market because the moon's further away or closer to the Earth. But as far as the full moon and the new moon, if the moon was in a symmetrical orbit, we would still have a full moon and new moon, depending on the position of the moon with the Earth and the sun. So why does a full moon and a new moon have an effect when it's going to happen no matter what? Like I said, I can understand the distance of the moon changing, but you can have a full moon and a new moon. Like I said, if the moon was exactly the same distance from the Earth at all times.
Well, let me tell you something, buddy. You just described why I have a real difficult time with some of this stuff, and I keep it as simple as possible. You're absolutely correct. You have those no matter what. Now, the ones that I think are most important from, just talking to people like, Arch Crawford and Al Larson and Bill Meridian and, a lot of these other guys that go into this in much deeper detail, they look for when you have multiple things that are happening with the moon, which they call a supermoon. That's where you have apogee and perigee coming at the exact time. Then you have something a little better. But Gator, I'll tell you what, I just go down and watch the patterns because that's what that's the thing that I understand. It's simple, but, at my pay grade, that's what I can understand. If a market's at a 1.618 expansion, I know that it's at the flat out moment of truth. Beyond that, I have no idea what's going to happen with it. So just use it as a as a guideline, because when it lines up together, it's perfectly. If it doesn't line up together, then, that's a big unknown, and you want to, factor that into your risk equation.
So you basically use your patterns, and if there's some astrological thing coming, it sort of throws a flag up, but you don't bet the farm on that. You basically, it's just a heads up.
That's correct. Well, I lost the farm Saturday in the Derby. My horse finished 11th. No.
Yeah.
No,
well,
but that
you can make it back this week.
That's true. No, in 2 weeks we got the Preakness, but I won't do anything in the Preakness because this horse will probably win the Preakness, but he's going to have a difficult time winning the well, what do I know? Well, let's get back to something that I slightly understand, and that's trading. But my $6 is... Okay,
thank you very much, Larry.
Stay with us, Gator. I want to ask you something else. Just explain something. Stay with us,
sure.
Please.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back. And Gator, I wanted to mention something to you. You know, we were talking about the astrology part, but the reason I got into this stuff was because of Dr. Miller and Jim Twentyman. And when we were doing this work, you know, it's really intense, but I could see the highs and lows on the chart themselves, and they were talking about the astrology part. So what we did is we went back and asked the computer to pick out all these astrology spots and then match it up to see if there were highs and lows in the market coming at that time. And that's what we came up with. So the patterns are the thing that I stick with because, you know, that's the one thing I can really understand. It's really simple for me to see an ABCD or a, 1.618 expansion, but to try to understand, the things in the universe that are going on. And there's so many things because, when you got 10 planets out there, crisscrossing across the sky, it gets really complicated. So I try to keep it as, simple as possible. The one thing I've always done, Gators, I've always surrounded myself with people a lot smarter than me because they give me some pretty good information. So I still do that.
Okay.
I hope that helps.
Sounds good. Yeah, like you said, it's just another piece that you do your own work, and it's like someone else says, "Hey, pay attention to March 5th or whatever." And so when March 5th comes up, you might look a little harder at your patterns.
That's a perfect description of it. Really is. That's you've got it, pretty much in a nutshell. Because you're the one that has to take the responsibility, for either buying or selling. That's that's never going to change. So what you try to do is put many things in your, your quiver for your bow and arrow that you're able to use, and that's really all you can do.
Okay. Listen, thank you so much, Larry. You have a great day.
Hey, thank you for calling in. You certainly live in paradise down there. That North Carolina triangle is really something.
It's amazing. It really is. Well, thank you so much.
Okay, you bet. Okay, folks, you bet. Thanks for calling in, Gator. That was Gator from North Carolina. Folks, if you ever get down to that area of the country, you're going to see God's work because, boy, it's really beautiful out there. It's really, quite spectacular when you see it. Now, we have a question about the head and shoulders pattern because we talked about a 3-drive pattern. I wanted to mention here just a little about the head and shoulders, which also comes out of the Gartley book. By the way, the book that I mentioned from early this morning was with Dr. Al Larson. It's called Your Electric Life. And it's available on Kindle, I believe, for $12. But it's a book that really describes, how the moon affects us, physiologically. And Al has a double PhDs, astrophysics and computer science. So nothing needs to be said, beyond that. So keep an eye on the book if you get a chance. We're going to take a look now at a head and shoulders pattern here in the NASDAQ. And this is a daily chart going back over 10 months. And as you can see, the left shoulder, and then you see the head in the middle, and then you see the right shoulder. And if you'll see those two cycles that I have, marked in there, and the larger one, as you'll notice, is almost perfectly symmetrical. It's basically 191 days from the left shoulder. That makes it halfway to the head, is right at 95. And so when you have the right shoulder lower than the left shoulder, like we have here, that's an even more bearish head and shoulders pattern, because the market is in a downtrend because you're making lower highs. If you had it equal to the other high that we had back in July, then you would have, triple resistance that they call a triple top. But on this one, you have a head and shoulders pattern because it is perfectly symmetrical in every, single way that you can measure it. And now you've, started, to the downside. Now we've been down now for 3 weeks here in the NASDAQ, so we're certainly oversold. We're due for a pretty good bounce from this level, but we'll see if we do get a bounce. And remember, these are shorter term cycles, so you don't always, get this bounce. And remember, we're in that period now where you sell in May and go away. And that's not that's only about a 60% seasonal that they talk about there, because in the first 50 years of the 20th century, it worked really well. The last 50 years, it's only been so-so. So it goes back and forth. And, that's just a calendar seasonality. I would rather look at the Mercury things that we get from Shane and also from Norm, and that'll give us a better idea of some of the things, that we're watching. That's pretty much, what we want to be looking at for sure. Anyway, what we'll look at now is, just give me 1 second. I have to change an order here, and we will be right back. And I'll be right with you. Hold 1 second here. I had to put an order in, and I have to do a little work, even though I'm working here at TFNN. Okay, now the next thing we want to take a look at here is the IWM. We've had a question about that, and it's been a pretty strong market. It's been much stronger, of course, than the NASDAQ, but you'll notice that on Friday, we also hit the perfect 78% retracement off of the April 6th low, and it was a perfect 61% retracement off of the March 23rd low, and it was a 50% retracement off the low on March 10th. So we had three major ratios coming together there. That tells us that it's a pretty good bottom. Now, you'll notice the last time that we bottomed, which was back on the 29th, we rallied for 2 days, and then it just rolled over. And, that's certainly a possibility because you're looking at the same thing at the same time. Now, on a global basis, last night, the German DAX did pretty much exactly the same thing that the Dow Jones and the S&P and the NASDAQ did on Friday. And it carried through this morning in the NASDAQ by quite a bit. So that's another one that, because that's a big part of the European trading community, the German DAX index, that it actually was pretty strong. But it went right up and it stopped right at a 61% retracement of the previous high. So we're still not out of the woods on this yet. So we'll see, how this thing, actually moves. I have another question about the silver and gold. The silver should have a pretty good support at 1620 in the silver. Gold, I mentioned the two major supports in gold are at 1264 and 1255. Those are the two areas that I'm watching. So keep an eye on that, from a technical point of view, because I think it's a pretty good spot. We're still pretty strong this morning. We've got the S&P is up about 6, NASDAQ is up about 10 or 12, and that's what we're watching. The bonds are, rallying back a little bit, which is highly unusual because usually when bonds are going up, stocks are going down. They have that old game that they play with the flight to quality. So it's interesting, folks, that we're only we got down to 1264 in the gold, and that number we're looking at was wow, that's really close. It's within about $1 of the thing. The problem is it's coming down so fast. It's going to be interesting whether it holds this level. So if we've got to take a break here. We'll get back to this gold market and we'll discuss it a little bit here.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look here at the gold market. I'm going to start it out with the gold. We better take a look at it because we got down here pretty quick. 1264 was the number I was looking at. We got to 1264.50. We're trading at 1267.20 now. That is an ABCD pattern. It's not at a 61% retracement, but it's right at a 1.27 of a previous swing, which is pretty important. Plus, we have the ABCD structure, and Gartley said, buy ABCD patterns in a bull market. He said that'll lead you to the promised land. So, it's much better. I can tell you, from past experience, it's much better to buy gold at 1264 than it is at 1303, because the risk here is a lot less. Your risk on this particular thing would probably be at the very most $8 an ounce, and it's trading relatively nicely. It's not having $4 and $5 wide-ranging gap swings or anything like that. So it's certainly an acceptable one to keep an eye on. But this is an ABCD pattern that we're seeing in gold now. However, we do have that 61% retracement setting out there at 1255, and we're down a lot today in the gold market. So that in itself will probably start to bring in some selling. But you've got to be patient. Wait for the market to come to you, and for heaven's sakes, put a stop in, because these things could have made a major top here last week, and we could be looking at something far more sinister to the downside. But that's the way I look at it. It's got to the price level. I mean, it's not as if it hasn't done what it's supposed to do. The $64 question is this going to be it or not? So you have to put your stop in, because when they go through these numbers, as you remember on the upside, I thought that gold was going to stop around 1245 and went $60 higher, and so you don't want to stand in front of those freight trains when they happen. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.